Right now, it seems like it's all about stock bulls. Alex Coffey, it's looking pretty good here. If you believe Bitcoin, which I do, when it comes to risk-taking sentiment, then you probably don't want to be short risk assets right now because Bitcoin's at the highs of the morning, 104.
Yeah, it can be one thing to look at for sure. It doesn't tend to be the top of my list, but it does indicate that there's some beta in today's market, that there's a sense of risk-taking. The fact that you do see the Russell slipping a little bit, I think, could be a little bit of an alarm, but we know that the Russell has just been so detached from the NASDAQ, so detached from the S&Ps over the last few years that it's, again, just one piece of information. What I'm really keying in on today is 83% of the S&P 500 components are higher and 91% of the NASDAQ 100 components are higher. So to me, that says for this market to turn around, you're asking for a lot of names to give up their rallies intraday. And you're also asking for some of the strongest parts of the market over the last few years to give up their moves intraday, which is the Apples, the Nvidias of the world. Now, they have a lot over the last few weeks.
Apple got wrecked yesterday. That's a big, important green box today.
Up here throughout the morning of yesterday and ended lower. So it is one of those situations where things can turn around. But again, you're asking for quite a lot of things to change intraday. Now, one thing I will add to this to tie this into yields, and it may be slightly different than other opinions you may hear on the network, is right now I think we hear a lot about the correlation between the bond market and the S&P 500. I've made the argument that that will start to break down, as it does typically carry an inverse correlation. If you see continued strength in the Treasury market or yields going lower, to me, that's more the fact that the market probably was lower, and that's a risk-off move. I don't think yields are driving the ship. I think if you do see yields turn around as they have right now, that's actually a good thing. That's actually an indication of an exhale of relief.
Yeah, agreed.
And it actually means that we're probably seeing the market move higher today.
Agreed. And I think that you probably should expect that if stocks continue to move out of that downtrend from the highs. The more stocks kind of break free, then I think probably bonds start to loosen up a little, yields start to loosen up a little again, and can start to climb. But it'll be a reflection of a generally good thing, which to your point also, stocks rallied alongside the steepener for months. There's no reason we can't have steepeners and the market enjoy it. So I think bonds, to your point, are not a threat right now. It seems like more maybe it's just a question of valuation and speculative fervor going into the inauguration. Can all these ideas that are keeping these valuations up come true? But that's something that could take weeks to really, it's not necessarily a strong bear case, I think, at the moment.
And also, I wouldn't discount just a noisy session on what is likely the biggest expiration day of the year with this January Leaps expiration. Just a lot of options are coming off the board that have been in positions for a long time for many. That can cause just tremendous volume and volatility in pockets throughout the day. Now, I'd see that as more noise than like sticky volatility. But if you're in these positions, you feel it. And so it could cause a melt up into the close. It could cause some choppiness into the close. It's going to depend. I'm not going to speculate on how it'll play out, but it's something to be aware of. Today isn't a regular trading day for that reason. This is a day that happens once a year. I know we have expirations every single week now, and in some cases every single day. But this one in particular, this leap expiration is typically one of the highest volume one, and typically has the most option contracts come off the board of any throughout the entire year.
Means it's of extra import, and usually those options flows are positive, as we spent a lot of time talking about. It seems like for those to be a negative force today, you'd have to have a big flip around in this market. And to your point, that would require some hard fades in some strong stocks. Tesla right now is up 3.5%. That's been the best looking Mag 7 comeback story after the sell-off from the highs. Tesla's been making higher highs and higher lows. Nvidia up 3%, with chips now up a full 2% too. Dollar went red, by the way. Dollar just made like a 40 basis point fade. That's a big move if you trade currencies in the dollar. So maybe dollar bulls will nibble here. I see a little bit of support on the chart, potentially at 108.7, but I don't think any of that is negative force. It seems, again, Bitcoin's telling us we're going to move, and S&P futures are almost We're almost at the highs of the morning here. We're very, very close. So it looks like it's shaping up to be pretty solid. And I think then your point is the flows can come back like KG was talking to at the end of the day and kind of slam dunk this thing.
Yeah, I just think it can add added noise to what's already a market that has a lot going on at the same time. And the reason I say yields aren't driving the ship is because I'm glad you have this chart up on the board. I think the dollar drives the ship, and I think yields have an impact on the dollar, no doubt. But reprieve in this rally that has been historic in the U.S. dollar over the last few months has to be beneficial for risk assets, just because by nature the rally has been difficult for them. And so just the fact that it's slowing down for a moment, it allows the market to catch its breath the same way you could talk about yields. I think yields are more anchored than the dollar, but at the same time, any reprieve allows the market to look elsewhere, position themselves and prepare. And also the fact that volatility is starting to come down, I think, allows a little bit more of not dipping the toe in, but maybe putting the whole foot in the water here, which I think you're seeing in the equity market.
When you say yields more anchored than the dollar, you think that the dollar's kind of got more ability to float to the upside than yields?
I think so, and I think it can happen for many reasons. I think you could have a situation where yields go lower and the dollar still goes higher.
Agreed.
You absolutely could have a situation where yields go higher and the dollar goes higher.
100%. That one's like a certain thing, but the big point is the other one you made, which is that we've seen scenarios where yields go down, but the dollar stays firm.
And that usually means equity market went significantly lower.
It also a lot of times has meant that bonds will fade to wherever the dollar got to, but it's a more sluggish, stepwise trade for bonds. And the dollar's still getting hit here this morning, so that's correlating with the upside in Bitcoin too. So again, Bitcoin really is trying to lead the market here. The kind of Forex markets and the currency macro stuff is pointing towards a strong day. S&Ps just can't quite punch through the opening high though, but I mean, we're really close. We're pretty much there. You've also got a note for us, Alex, real quick, just to make sure we stay on the scheduled events here. CRM. Up about 1.3%. I haven't really thought about the cloud stuff so much this week because Taiwan Semi has been, I think, the tech focus.
Yeah, and I think that there's a piece of this.
Oh, TikTok, sorry. We got breaking news. TikTok's going to uphold the ban. All right, go ahead.
Yeah, then it comes down to enforcement. It doesn't seem that there's any political appetite at the moment for enforcement from either side. So we'll see ultimately what happens. I'm not a TikToker, but I know that it's important to so many. So, hey, look, this isn't how you want, even if you're Meta, I know that they'll probably benefit if TikTok goes away, but you shouldn't want your competition to be legislated out of competition. That seems like playing below the belt. We'll see what happens.
Just speaking of your competition getting legislated away, I think part of the reason I'm a little flippant about the TikTok stuff is just like there's so much bad financial news on TikTok, and there's so much fake news, and there's so much like just very misinformed stuff. There's a lot of funny stuff though.
It's not limited to TikTok though. That's on X.
For
that's
sure.
On Meta. So.
But like some of the trading stuff too is like, man, because it's really, I mean, some of it works, but mostly in that market. But it is kind of a first maybe thing for policy-wise.
I will say, though, that probably was to be expected based off the questioning and things, so I don't think that's a surprise. But again, it's going to come down to enforcement, and I don't think that it's politically appetizing at the moment for either side to do that, given just how many, particularly in a younger demographic that seems up for grabs politically, you really want to engage something that's politically unpopular with them. So we'll see. Again, that's too speculative. We'll see ultimately what happens. Obviously, we're in the baton passing stage. So time will tell on that. It's not a publicly traded company, but there is fallout with Meta and Snap and other names. So
I'm surprised again that like Snap hasn't done something about it. Meta maybe. All right, hit me with the Salesforce thing real quick.
This, I think, ties to macro as part of the conversation, though, more than maybe is being talked about. First off, this is from TD Cowen. They upgrade to buy. They moved the price target from 380 to 400. The primary reason here is they think that there was a big rally, now a pullback. They think that creates a compelling entry point. But one of the things that has brought Salesforce back to the table for investors is this idea and this platform of Agentforce, which is essentially a platform where companies can create AI customer service agents. And they're not the only company working on this. They might be the one that's biggest and most public in terms of this particular platform. But this has always been where AI is going, where some of the lowest skilled jobs are going to be replaced by AI technology that can basically just do tasks. So while this might be beneficial for a Salesforce or some company that benefit and you use this as a cheaper alternative, this is jobs lost, not created in terms of what it's looking at. So to me, this has always been the kind of eerie disruptor of AI. And it remains to be seen ultimately what that fallout will be, because if there's a lot of unskilled labor that suddenly doesn't have any opportunity, we know hiring's somewhat lackluster at the moment. Could it be an interesting next several years as this technology just gets better and better?
Yeah, 100%. You know Salesforce is going to be all over whatever can fatten up their bottom line.
You know, it's existential for them as well. I mean, their technology is being disrupted. I mean,
exactly.
You don't need platforms to assess customer relationship. You got AI that does that now.
They spent their existence buying up everything around them, basically, and creating as big of a fortress of software applications, enterprise value as they possibly could. I think now they're going to take their AI, run through, and say, we don't need that. We can automate that. Da-da, ba-da, ba-da, you're gone.
If you think about what they did, they created an ecosystem to make work more efficient for human workers.
Yeah.
Okay.
Yeah.
Well, if there's not human workers for these lower skilled jobs anymore, you don't need the system.
They're juggling right now. It's got to be I mean, if you're like, from a strategy perspective, it's got to be a super interesting time to run Salesforce, because you have threats from it and then you have positives from it too. And it's going to be a juggling act.
And they have the money to spend in research to be involved.
And build their own stuff, yeah, for sure. And then targets companies that maybe they would have been interested in buying. They would have had to go to the market and paid for bankers and paid for all that fees to go and buy someone. They might be able to write their own code, in a couple months with a few people now, and they won't have to buy them. So
exactly.
It's a super interesting time for Salesforce. All right, 1.5%. I don't know how, by the way, which way it's going to break price-wise for Salesforce. I think the argument could go both ways.
Exactly, and I think it applies to Salesforce to a lesser extent because it changes the nature of the existential. Yeah. There's a situation.
Adobe was an easier one to undercut immediately.
Adobe is more an expression of this, but to me it increases volatility because it changes the outcomes dramatically. You can have Salesforce as a winner, but it can be a big loser. 2 or 3 years ago, pre-AI is a major thing, Salesforce just kind of was a consistent winner. Can't say consistent winner anymore. Volatile outcomes means more volatility for the stock price.
Good stuff. Great analysis. Thank you very much, Alex Coffey. Good look at Salesforce there. The push and pull of AI, the push and pull of the market still dragging on the Russell, but not too much elsewhere. So Russell slipping, but Bitcoin moving higher. So it seems like we'll call that neutral for sentiment.